We've got a big week this week coming up. We have a June Fed meeting. We have the conflict between Israel and Iran. A lot going on with XRP that's going to hopefully unravel this week in a good way. So what does this all mean and how does it affect your crypto? That's what we're going to get into today. This is Joe from Joe Knows the Cryptos. If you're not a subscriber, please just hit the subscribe button now. It will help me get the message out to more people. And I would greatly appreciate it. And as always, I'm not a financial advisor. This is not financial advice. It's purely for your entertainment. So now, let's start by talking about the Fed meeting. So this coming week, Federal Reserve Chair Powell will announce the results if they're going to raise the rates, lower the rates, or keep them the same, and what they're doing with quantitative easing and quantitative tightening. And when it comes to all these things, I really like to talk about some fundamental things. So let's get into some of the macro piece here. They're going to look at a couple things. Is the economy growing or shrinking? What is unemployment doing? What's the GDP doing? What's inflation doing? So GDP, right here you can see this is from this is a governmental site, the official website of the United States government, and they're talking about GDP did retract a little bit per their numbers, negative 0.2 in the first quarter. Well, you would think, okay, that's really, really bad. But there has a lot to do with front end loading because the fear of the tariffs and things like that. So, and growth over the year before. So all in all, there wasn't, it seemingly looks like no growth, and that's not really a full picture. The economy, let's look at some other things. Unemployment rate. These are the unemployment numbers going back a long way. But if you just go back, May of 2025, 4.2%. You go back a year, May of 2024, 4%. Oh no, Joe, unemployment's ticking up. Well, that 0.2% is minor, but 4%, 3% is still what we call full employment. Anything between 3 and 5% is like overemployment. That sounds like a weird word, but it's full employment. And we have everyone who wants a job pretty much, not everybody, but the government considers that full employment, and 3% unemployment rates are very hard to sustain. So 4.2 is still considered a very healthy and strong economy. So then you get into CPI or inflation numbers. And as you can see, we have steadily decreased. I mean, this is over the last year. If you go over the last 5 years, we've steadily decreased in the inflation. This is the consumer price index. And basically it looks at a basket of goods and how much those cost people. Do they cost more or less? Well, inflation is still rising. We still have inflation. It's just not rising at the same rate. The Federal Reserve, their target rate is 2%. And they always say as they get closer to the target, then they'll consider backing down, bringing down that interest rate or bringing down the amount of bonds or mortgage-backed securities that they sell. When they sell those bonds, it decreases the price and it gives you effectively higher yield to attract people to buy those things. The yield is the rate of return. So we're seeing that unemployment is working towards that 2% number. Now, remember the Fed at the end of last year, they cut the rates. That's weird. We were still at overemployment. We were still at inflationary numbers that were nowhere near 2%. And then, they didn't lower the rates at all. Now they're worried about tariffs. Well, tariffs have proven not to cost more. Why? Why did the tariffs not cost us more? Why did the price of things fundamentally go down, comparatively speaking, versus up? Well, it's this next piece, and this is the most concerning piece. Crude oil. We had the price of crude a year ago was $84 and change. It has steadily decreased, and it took a sharp decrease this year down to about $57 a barrel. And then what happened this week? Well, we have the tensions in the Middle East have really affected the pricing of oil. Now, this is not good. This is not good for reducing rates because the tariffs didn't have an impact because oil has gone down. Think about it. The cost of oil is involved in every single good and service you buy or provide. And if that's the case, it's going to naturally keep the cost of things higher. When the price comes down of oil, then those things are naturally going to cost less. It doesn't cost as much to ship something from China to LA if oil is lower cost. And the lower price of oil was absorbing a lot of the cost of the tariffs. Well, now with the conflict in the Middle East and the rising price of oil, if you see the breakout, if you want to look at price action, here's a great study in price action. But you see the breakout of this cost of crude. And that, we went from 57 to 73, but overnight we went from it was like 60, 61 to 73. That's like a 15% increase. We cut our reduction in the cost of oil in almost half. And this doesn't bode well for Fed reducing the rate. So really right now, the driving factor in in the driving narrative, yes, I know the Iran-Israel conflict is driving the narrative, but the narrative is really oil. And so in the cost of this oil is really going to dictate when the Fed drops the rates, if the Fed drops the rates, because they're not going to drop the rates if oil's at $100 a barrel. And how can that happen? Well, if Iran and Israel conflict continues and we're affecting the output, and more importantly, the shipping routes I think it's the Strait of Hormuz or the Gaza, something or other, Strait of Hormuz, whatever. It's a very narrow area where Iran is right along a body of water. And if they affect the shipping routes of oil, it could make oil prices spike. And so this is one indicator you have to look at. It's not financial advice. I'm not your financial advisor, but check out this indicator because this is going to tell you how bad everything is. Right now, it's baked in that there's the tension has made it rise a little bit, but it hasn't spiked it so bad that it's going to crush us. But we got to watch this because this starts to go up. Our chances for a rate decrease are going to go down. And all this means this is the chance of a rate decrease this week by the Fed to increase money supply and pump your bags is very, very, very little. I would not bank on the Fed dropping their rate. I would not bank on this at all whatsoever because I just don't see it happening. So with that, let's talk about the last big piece of news for this week. I've been watching this XRP for a couple of years now. And just full disclosure, I have a bag of XRP, and XRP makes up a modest holding in my bag. And XRP, it is predicted let's talk about last week. On June 12th, Ripple and the SEC, they jointly filed a motion asking that Judge Torres to vacate the injunction on institutional XRP sales. Remember, that's a very important piece. And to modify the $125 million penalty that they were assessed by Judge Torres. Now, if you remember about a couple weeks or a month ago, Judge Torres rejected their claim or their injunction to vacate that institutional XRP sales. And this is big because without that, it wouldn't lead to the next piece, right? It wouldn't lead to the next piece. And so that ruling is expected by June 16th. That's Monday, June 16th. And hopefully we'll have a favorable outcome and it can remove a major overhang and trigger hopefully a price higher. We would love to see XRP go higher, right? Now, where could that price go? Well, I don't think it's going to moon. So if you're expecting XRP to moon with this news, it probably won't. It's probably mostly baked into the price, although the price is being inhibited right now by conflict in Iran and Israel. So you got to also remember, Ripple is gearing up to launch its XRPL EVM mainnet, enabling Ethereum-compatible smart contracts, this quarter, I believe. So along with that USDC integration on XRPL, we're talking about building institutional momentum. You also have to remember NASDAQ-listed Trident Digital and other are proposing XRP corporate treasuries. And this is going to signal more demand and more growth. That coupled with XRP spot ETFs, there's a lot of institutional interest in XRP. And I think it was last week at the Apex Summit, Brad Garlinghouse, the Ripple CEO, he highlighted the potential. He said something to the sort of XRP to capture 14% of Swift's cross-border payments volume within 5 years. Now, he wasn't promising that. I think it's just something he said in excitement. But think about the implications of that. That would be huge. That would pump your bags. Hasn't happened yet. A lot has to happen for that to happen. And that might take upwards of 5 years. But that would definitely pump some bags if it was to happen. Now, let's just do a quick recap. So here's what to watch. Number one, the legal ruling. Remember, on Monday, June 16th, a win, that could be a major catalyst towards $3. And a delay could stall momentum for XRP. So hopefully XRP gets the injunction removed against the institutional sales, and hopefully that will pump all of our bags. But don't bank on it. Technical breakout, we could see it. It's somewhere around $2.17. Maybe it goes to 232, 242, 250-ish. But if once it gets over that 232 range, that could be a nice signal for further gains. Let's also look for the rollout of the ETFs, or at least more talk about the ETFs and more talk about institutions. So all in all, again, a big week. We've got to watch the Fed meetings this week. Don't expect any rate changes. If we do get rate changes, it will be a wild ride, but I'm staying away from making any bets on it. Israel-Iran tensions are going to run the narrative all week. I'm sure we're going to see rumors of negotiations. I've already heard rumors of negotiations and peace talks. Obviously, that would make the market rebound pretty quickly. But again, I would not bet on it. Finally, XRP, if we get the ruling and the case is settled, I think we will see a rally. However, I don't think it's going to immediately skyrocket. I think some of the rally is built in already. We really got to get past these Iran tensions. First it was tariffs, and it's Elon Trump fighting, and then it's Iran. Iran's a pretty serious event, but I just don't think it's going to skyrocket. So I'm sorry to the XRP army right now. I just don't see it skyrocketing off that news because everyone knows it's coming. I do have XRP bags again, so I'd love to see a moon situation, but just don't bank on it. So remember, with that, every single day in crypto is an adventure. And if you're not a subscriber, now is the time to like, subscribe, and share. And if you haven't done so already, I would greatly appreciate it. That's all I got. Hope to see you next time. See you later.